Adam Button, chief currency analyst at Forex Live, joins us now with his take. Good to see you, Adam.
Hi, Greg.
All right, so we got a lot to talk about. Let's start with the Canadian economy. That's not a bad print for the second quarter, 2.9%, but we're worried about business investment, and the Canadian dollar is lower today. The main catalyst seems to be this GDP report.
Yeah, that business investment number was the lowest since 2016. And if you look at the Bank of Canada and what they're looking for, that was supposed to be more of a contributor to growth, but it's starting to be a little bit of a drag, or not as big of a contributor as they might have hoped. So that doesn't really fit into the thesis that they've been selling. However, that could just be worries about NAFTA. And once we get through the next few weeks, that might start to pick up.
All right, NAFTA, that's one is breathing down our necks. It is Thursday. Tomorrow, of course, follows. It's Friday. And there is where the Americans drew the line. They want to deal with us by Friday. We only showed up earlier this week. What happens if we don't get that handshake agreement tomorrow? What kind of expectation? What would be the expectation for the loonie?
I mean, it's been amazing to watch. Already today, before lunchtime, we had 3 scrums with Chrystia Freeland. Every headline that's crossing is moving the Canadian dollar one way or another. Right now, all the headlines are about optimism, hope. Yes, there are still some things to work out. And we would assume that if there was going to be bad news, it would start to leak out by now. That hasn't happened. So optimistic that it will get done, but if it doesn't, I would say the market's looking at probably a 70–80% chance of a deal right now. You've got to take all that back out, and you have the Canadian dollar, very badly hit if it all falls apart, assuming it can't be put back together and these deadlines can't be pushed.
Oh, the words seem very friendly right now. I swear on the way in, I actually saw a quote from Donald Trump saying that he loved Canada. I'll have to pick that up again, but I thought I saw the word love in there. And maybe this is part of it. Get it over with us. This fight's been going on long enough. Mr. Trump, according to the Bloomberg terminal here, is said to back $200 billion in China tariffs as early as next week. So it seems like they have their next big target in sight. China. What does that mean for the international currency markets?
Yeah, just breaking news there. We saw that wobble the Canadian dollar a little bit, wobble the rest of the market a little bit. And, it says that this is the next big story. If you look beyond this trade deal, that's the fight that everyone in the Trump administration really seems to want with China. And I'm surprised the market hasn't taken this as a little bit worse news, because that's pretty much a full-out trade war between America and the United States, and it's the kind of thing that will set off some risk aversion. Now, there were some caveats in the story, like saying that he hasn't made a final decision yet, that this might only be an announcement. So with Trump, it's all just positioning until you get the final decision, even with NAFTA.
And of course, as people get worried about a trade war against the world's 2 largest economies, people, like you say, they get out of the riskier assets. What is often seen as a safe place to put your money is the U.S. buck. That seems counter to what Donald Trump wants. He's gotten angry at his own central bank for not having his back. They like to see a low dollar. That's good for their exports.
It's a tough one to handicap because that risk trade will generally lead to a bid in the U.S. dollar. But we see today, even on these headlines that have come out, the dollar hasn't strengthened that much. It's losing ground against the Swiss franc, the yen, and some other safe havens. And I think as we go into a trade war with U.S.-China, the Canadian dollar wouldn't be hit that hard against the U.S. And one of the reasons is you have these 2 giants, and if they stop trading with each other or they significantly ramp that down, they're still going to be trading. And one of the places they're both going to turn to is Canada. So if you're a Canadian company who can replace some of those orders going either way, then I think you're in an amazing spot. And Canada on the ground can do very well. That's countered by some of the market volatility that will come in. But this can be a tremendous opportunity for Canada if we can tie up NAFTA and then at the same time ramp up exports to both the United States and China.
Lastly, I wanted to ask you that if everything starts going Canada's way, we get NAFTA squared away, the Bank of Canada raises rates again in October. By the time it's freezing cold here and I want to change my Canadian bucks for some U.S. bucks and go south, will it be better or worse for me?
Yeah, I think it's going to get better. I mean, China's the big wild card. NAFTA, I believe, is going to get done. If you look at this point in the cycle, commodities aren't that strong. They can get a lot higher, a lot stronger from here. The Canadian dollar can leech off strong U.S. growth, can leech off stronger global growth, and the Bank of Canada raising interest rates. And this can be a very strong period for the Canadian dollar. Once NAFTA falls into place, that's really the first domino to make things push up the Canadian dollar. you can easily get up to 80 cents in the next few months from here.